If you have been trading ICT for months and you are still not seeing consistent results, pay attention right now because this model will change that. The strategy I'm about to teach you is the same one I rely on when I want clean high probability ICT setup, and it's the same model, not just my student but a handful of traders on Twitter claim to use to get funded and withdraw tons of money from Profem. And towards the end of this video, I'll walk you through the best risk management framework that works well based on the statistical win rate. I'm going to give you guys the mental model you need to adopt to trade this model effectively and consistently. Then finally, I'm going to give you guys multiple chart examples so you can truly see the logic behind every entry and build your confidence in this strategy. Here is my guarantee. If you remove any distractions, see through this lesson from start to finish and truly understand the logic I'm about to show you, you have everything you need to pass any Profem challenge and actually start making consistent profits from the market. This might become the only ICT strategy you rely on. Please guys, don't just take my word for it. After watching this video, backtest the strategy for yourself. That's how you build true confidence and mastery. And if you want the slide I used to explain this strategy, you can grab it in my free Telegram channel. I'll link it in the description. As always guys, if you find this video helpful, please support us by liking the video and subscribing to the channel if you are interested in this sort of content. If you have any question, feel free to leave it in the comment section and I will try my best to reply to all. Alright guys, so let's get into the video. This is actually a day trading model and it requires no daily bias and it works on all pairs, right? So if you guys are scared of daily bias, don't worry, you don't need daily bias. Now for the rules of this strategy, now this is a bullish example, a bullish playbook, right? The first thing you want to look for is directional bias. And basically this is very easy. Just look at the trend. Is it bullish or bearish? Look at this thing and see that it's clearly bullish. And when you figure this thing out, if you directional bias is bullish, you want to be looking for more of bullish setup, right? So in this case it is bullish. So what are you looking for is the bullish setup. Now you wait for the previous day low to get rated. So what do we mean by this? You can see that this is this candle and this new candle forms, which is the next day opens at this place. Now trade lower to take out this previous candle's low. After taking out this previous candle's low, we are going to start looking for a market structure shift on the 15 minutes time frame. So once the previous day's low gets rated, we're going to jump to the 15 minutes time frame to look for a market structure shift. Now I want to show you guys what I mean by valid market structure shift. And some of you coming from the ICT community, so you guys will have your different way, but I have a systematic approach to spotting valid structure shift, and these are the checklists. One, I want to see liquidity sweep. Two, I want to see price tapping into a higher time frame key level, which is this. Now I want to see displacement breaking structure, as you can see here, and also I want to make sure that it actually violates an opposing array. So as you can see, this is actually a bearish order block. This candle you see here is a bearish order block that got disrespected. So this makes it high probability and I want to look for divergence. So once I see something like this, I'm going to take my entry at this zone and I'm going to target 50%, an imbalance around 50% of the previous day's range. Right, so that's the rules for the bullish example. Now let me try to summarize everything. So in summary, the first thing we're going to figure out is the trend bullish or bearish. Is the order flow bullish or bearish? If it's bullish, they're taking more bullish setup. If it's bearish, we're looking for more bearish setup for that pair. In this case, it's bullish. So now, the next thing we want to do is to go on the daily time frame and wait for the daily candle to sweep the new day candle to open and sweep the previous day's candle. Once that happens, just as it swept it, we're going to start looking for market structure shift on the 15 minutes time frame. You guys know the rules. And when we get it, we are going to take our entry and target 50% of the previous day's range. This is the previous day's range high. This is the previous day's range low. So if you want to look at it, this is the previous day's range high. This is the previous day's range low. We are taking our entry, our exit. We are exiting at 50% of it. So that's it for the bullish example. Now for the bearish example, it's just the opposite. We want to see the directional bias to be declining. Let's be bearish. Now we want to see the previous day's high to get swept. So just as he swept the previous day's high, we now jump to the 15 minutes time frame and we start looking for a valid structure shift. So what is a valid structure shift? We want to see price tapping into a bearish key level. Then we want to see price actually swept liquidity tapping into a bearish key level, then a break of structure. And we want to see that this break of structure violates an opposing array. And what is that opposing array? You can see this is a bullish order block that was actually formed, but now it was disrespected. So this makes it high probability, and you can look for a divergence. So this is what I'm looking for. When I find something like this, I'll take my entry at this place and target 50%, an imbalance around 50% of the previous day's range, right? So what do I mean by that? So this, so in summary, all right, so in summary, this is what I'm looking for. I've determined my directional bias to be trending, to be declining. Now I'm looking for the previous day's high to get weighted. Just as price rates that previous day's high, I will jump to the 15 minutes time frame and start looking for a structure shift. So I'm going to now target the 50%. So this is how it will look like on the 15 minutes time frame. This is the previous day's range low. This is the previous day's range high. So we are taking our profit at 50% of it around this place at an imbalance at 50%. Alright, so let me give you guys tons of life examples so you guys can understand what I'm really trying to and the logic behind this strategy. Let me cut you guys here for a few minutes. So this is an update on the challenge we started with the team. If you guys are not aware, we actually started a challenge. The initial goal of the challenge was to accumulate $1 million in profit capital. After some time, I decided to break it down to make it modularly so it can be something that is a 3 months goal. So the goal was to start with the smallest profit, which is 5k, and scale up to 100k in profit capital. So the reason why I started this challenge is to help my students build capital. And we actually started this challenge, I think around late August, right? So this is an update I posted on the challenge. So the first 5k has been passed. The second one is up 3%. And we try to make withdrawal from the first one and use it to buy the next bigger profit, which is 25k. And that's how we scale up. And this is actually a proof of it. I bought the account, my student bought it, and you can see that we actually passed it. It's an 8% profit target. This is phase 2. The phase 1 I've posted it if you scroll up. So this is the second account we are trading, which is up 3%. Alright, so that this update was on 13th of October, and the recent one we posted was on 10th of November, which is today. And the mission continues. The second 5k account has been passed. The next 25k account is phase 1 is currently up 2.7%, and the goal we are looking to do is to pass the 25k and make just 3% and withdraw this amount. This is the math here. Then we're going to use the profit to buy a 10k at the 100k account and make which will cost $500, then use it to pass it. And at the end of this, so the goal of this next 3 months is to make 200k in profit funding, right? So if you guys are interested in it, and this is actually the proof of it, you can go through it. You can see this is actually the proof of the next 25k we have bought. This one is up 20. This up only 2.7%. And if you are to scroll down, this is actually a trade that I took on it as I'm about to pass a trade that is currently running that is about to be passed, right? So if you guys are interested, you can reach me out on this Telegram channel. Just click the link to join the free group, and you can even scroll through it to see the proof or see the setup we are posting, and just send a DM to the admin. I'm going to talk to you personally. I see if you're a good fit, and if you're a good fit, I'll add you up. It will cost you money, but if you don't have the money to take the challenge, you can actually start doing the challenge on your own. All you need to do is to subscribe to the all you need to do is to subscribe to this channel, to this free group, and take it. So not all setup I post are going to be that are posted for free. So when you see one, you capitalize on it, get a reliable platform, and set a 1% risk per trade. And if you build a trading manager, so this is you can go through this pin post and try to do the challenge on your own. It's key you challenge yourself. You want to go and challenge yourself. If you don't challenge yourself, you're not going to make money trading. That's the best way you can make money, by challenging yourself. But if you guys want to join my group, you can actually send me a DM. I think that's the best if you have the money. But if you don't have money, just try to do it on your own. So that's it for this. I just want to let you guys know this is what our mentorship is offering. Now this first example is going to be on GP card. Now the first thing you can look at is that the trend is bullish. You can see that trend is just bullish. You don't need an indicator to spot this. Now just let's say that this is where price is currently at. Let's say that all these candles at the left hand side have not formed, right? So all these have not formed. So this candle just finished printing and this one opened. So where this one opened at is at this place. Sorry that my FX will play. I'm yet to subscribe, right? So and even though I subscribe, it is lagging. I don't know why. So it opened at this place. So this candle opened at this place. Now we are going to mark this previous candle's high, mark this previous candle's low. So what are we expecting? We are expecting this one candle, this new candle to trade lower, sweeping out this previous candle's low. So once it did, as price it just swept it straight to this previous candle and sweep it. What we are going to do is to jump down to the lower time frame. Right, so our lower time frame is just the 15 minutes time frame. We're just using the daily time frame and the 15 minutes time frame. Now what are we seeing here now? This is the 15 minutes time frame. Remember, we're just using the daily time frame and the 15 minutes time frame for this strategy. So what are we looking at here now? We can see that this is the previous day's high, range high. This is the previous day's range low, and you can see that price swept it here. This is where price opened for the day. If you don't know the opening price, depends on the opening price here. The real opening price of the daily candle, if you're using EST time, which is UTC minus 5 or something, US time, right? UTC minus 4, that is New York time. But if you're using it, the time should be 17 o'clock. This is when the new candle starts printing. So you can see from 17 o'clock, it opened at this place and it's ending at 17 o'clock. Now this is the previous day's range high, previous day's range low. It's opened at this place, now swept the previous range low. So immediately price sweep this place, trade below this place. We're already on our 15 minutes time frame. And what are we looking for? A structure shift. Now, what is this structure shift? Remember the rules I gave you guys. You want to see something like this. That's basically our structure shift. And we want to see, this is what we are looking for. We tap into a key level, then it swept liquidity, tapping into a key level, and its values a market structure is break of structure. That's simple. And we're going to take our entry at this place, put our stop loss at the low, and target 50% of the previous day's range. This is the previous day's range from this high to this, from this low to this high. So we are going to target 50% of it. But remember, since the trend is bullish, we are going to the trade is actually going to hit the take out the previous day's high. But for you not to end up in break even trade, you want to just target the 50%. So now this is how it will look like. If you have to take this thing down, it will be like this. Yeah, so unfortunately this didn't give us our entry model we are looking at. But if you were to go to the lower time frame like 5 minutes, you can see it. You can see actually that this, you can see, what can you see? You can actually see that price forms a low, then comes back to sweep out that low, then break structure, then retrace and enter and continue to this place. But if you have to go to the lower time frame, you can actually see it. Now entry would be something like this. Would be something like this. Stop loss at this low, and you're going to target the 50%. If the 50% is huge, I always advise you to just be realistic. 10 hours is huge, but you can actually take 10 hours if you want. But something I want to point out that try to be systematic with your trading. Always be systematic. I told you guys 15 minutes time frame. Once you don't see 15 minutes time frame, once it doesn't occur in 15 minutes time frame, just leave it. Simple, like that. So let's jump to the next example, bullish example, so you can get familiar with it more. Now this is how the 15 minutes time frame is looking at. So now what do we have here? This is the previous day's range high, the previous day's range low. So price opened at this place, then do some kind of price action, and then finally trade lower and taking out this previous day's low. As it take out this previous day's low, we now jump to the 15 minutes time frame, and we are looking for what? Again, we are looking for something like this. So this is what we are looking for: a liquidity sweep, tapping into a key level, then the market still shift. So what do we have here? We have the same pattern we are talking about here. You can see that price puts in this low. Now price didn't take out this low, but if you are going to, this is GPP card, so if you look at euro card, you can see that it take out this low. So what do we have here now? A divergence. So it finally breaks structure as it breaks this structure, we take our entry maybe at this other block right here, and our we exit at 50% of the range, which is somewhere here. But as always, it will always trade to external range because of we are bullish. It will almost always trade to it. So if we put our PNL indicator, you can see this how it is. I'll enter at this place, then I'll exit at 50% of the range. If it is too small, you have to consider. If it's too small, if I was on this trade, I won't take it because the risk reward is not, I don't vibe with it. I want to say like 1 to 3, but in this case it didn't give me out. So I hope you guys understand the logic behind it. Now let me try to give you guys one more bearish example, then we'll call it a day. Now this next example is on CAD CHF. It's a bearish example. What do we have here? I can see that price is very bearish. CAD CHF is very bearish. So what are we looking for? More of bearish setup. Now this is setup we are interested in. Let's say that this whole price action have not yet formed. So this candle just finished printing and this one opened. So what are we going to do? We are going to mark out the high, then mark out the low of this candle. And what are we expecting? We are expecting price, this candle to open at this zone, then trade higher, taking out this previous candle's high. Immediately we take out this previous candle's high, we jump to the 15 minutes time frame. So this is the 15 minutes time frame. What are we looking at here now? This is actually the previous day's high, this is the previous day's low, and this is where price opened. So price opened at this zone and trade higher, taking out the previous day's high. Now finally, what do we have? The same pattern I told you guys. We have a liquidity sweep, then this is a liquidity sweep, then finally a break of structure, then retracement, and price trade all the way to take out the previous day's low. So what are we expected to do? What we're looking for is basically a liquidity sweep, as I just told you guys. Let's try to mark it out. Then we want to see a break of structure. This is the break of structure. This is the main break of structure because of this bullish array that was disrespected. This is a bullish order block, as you can see here, that was disrespected. And you can decide to take your entry maybe at this bullish order block, maybe at this bullish order block, and then maybe take it at this place. It actually hits the mean threshold well. So you target your stop loss always at the high. Now you take it at the 50% of this previous day's range, right? So this is where you put your end at. So in this case, once I look at it and see that it's not up to 1 to 3 hours. Personally, I don't like to take any stop less than 1 to 3 hours, but it's up to you. If you like 1 to 5 hours, if anyone that is okay for you, take it, right? So actually, I don't trade all this setup. The setup, you guys know the setup I trade. It's a very unique model that offers 10 hours, right? So this is it, and as you can see, if you do target the external range, it actually gives you a good the previous day's low. It actually gives you a good risk reward, but stick to the 50%. And the reason for that is because that's where price will always trade to. It's easier for price to trade to the 50%. So these are the 3 examples. Now finally, risk management and psychology. I know at this point you guys are already exhausted and you are about to click off this video, but wait, let me give you guys the most important part. Because if you want to know the kind of risk management that works well for this strategy based on the win rate, right, and the kind of psychological hurdles you're going to face, so you can get prepared for it and know how to adapt while you face it, right? So the first thing you want to do is to limit your risk exposure. You want to limit it to nothing more than 1% of the account equity per trade. And this ensures sustainability, prevents emotional driven decisions, and protects your long-term capital growth. When you take more than 10 or 1%, one is going to you can see yours with this strategy. You can actually see yourself going through 5 losing streaks. If you're not aware, you can actually see it. So if you're risking more than 1% now, you can see how bad you're going to go. If it's a pro firm, you have already blown the account. This is why I say anything less than 1%, you can actually risk 1%. So the next thing we're going to look at is the loss limit and emotional guardrails. So what do I mean by this? You want to take a maximum of 2 losing setups per day and 3 losing setups per week. So whenever you take 2 losing setups in a single day, you want to stop. And if the next day you open the next day and you took another setup, just stop. Take the rest of the week to try to analyze and try to build your confidence back. Because the more you're taking these losses, you're losing confidence on the strategy, and you need to build it back. And the more you're taking losses, you're losing your mental capital, right? And without good mental clarity, you're going to be making poor decisions in your trading. So this threshold prevents frustration-driven decisions, frustration-driven trading, and protects psychological resilience. So the next thing is cognitive risk management, and this is actually something no one talks about, but this is something that I have come up with and I've noticed in my students. Right, so something you want to take note of is you want to restrict yourself to a maximum of two trading actions per day. So what is this two trading actions per day? This can be missed entries, break-even trades, losing trades, or profitable trades. So the reason why I say this is because each of these actions usually eat up your um your emotional capital, should I call it your mental capital. But so anytime you take a missed entry, you know how it feels, how annoying it feels when price trades close to your entry and just spike up and hit your TP and you miss that entry. Look at the frustration. You're like, it you just hop in and try to make that money back, and also feeling you notice that you felt exhausted each time you take a single trade. You really start feeling some kind of exhaustion. So that's what happened. Break even trades is very frustrating. Imagine price trades to 2 hour or 3 hour now come back to trade to hit you, stop you at break even. You cannot, you're going to find it difficult to bear that scenario. So next thing is losing trade. This one is obviously what you guys are familiar with. Losing trade hurts, right? And it makes you feel like you want to get it back, you want to do this thing. So you want to, and next thing is profitable trades. Yes, profitable trades also affect you. If you take two profitable trades in a row, you the next trade becomes low quality because when you take two profitable trades, you now think you own the market, that this strategy cannot fail, and what you tend to do is to maybe even up your risks. And sometimes the more you take a setup and it wins, when you take the first setup, maybe let's say you follow your whole checklist, the whole rules for your setup, but the next one you tried you saw one checklist that didn't checked out, and so you just omitted a checklist and it played out well, so that was great. Now the third one, you see that checklist didn't actually the checklist didn't actually meet, and there's the former one didn't actually meet, and now the recent one didn't meet, and you just neglect it. And that's how you keep neglecting some of your checklists, and small time you notice that you are completely out of your plan. So you want to restrict yourself to a maximum of two trading actions per day. So when if you let's say you take a missed entry and a break-even trade, you stop. One losing trade and one profitable trade, you stop. One missed trade and one profitable trade, you stop. Just you get what I'm trying to say. This rule reduces fatigue, decision fatigue, and encourages discipline. Then finally, strategy refinement and development. So you want to dedicate at least 2 hours per week, 2 full hours per week to backtest for performance validation. You guys know I've told you that this backtesting builds confidence, right? So it's what's going to give you confidence to keep executing, especially through a losing streak. And you also want to don't try to backtest or foretest a new strategy. Just try to backtest or foretest a new idea, so to improve this, that will improve the strategy. So this idea can be, example now, just as I told you guys in this place, I tell you guys look for previous days low and then a market share shift. You can decide to backtest. What if I only take market share shifts that occur on a kill zone, not just any time, it occurs on a kill zone? How will it affect my win rate? At the same time, how will it reduce my trade frequency? And in the long run, does it really make sense? Does it gives me a good statistical advantage? So if that does, then I'm going to refine my strategy a bit. Or what if I decide to take only market stewardship that occurs on New York during New York session, or not just during New York session, during this specific time, 9 a.m. then 9 a.m. on in New York, 9 a.m. on New York session. How does it work? How is it going to affect? So this is what I mean by backtesting a single idea, not to go to look for a new ICT strategy. So that's it for risk management and psychology. So this framework is designed to integrate psychological discipline and risk management precision, helping you maintain consistency, reduce stress, and build confidence over time. And this is an effective journaling practice that I actually adopted and also teach my students it. So you want to maintain a comprehensive trading journal. This should include the trades you take in, the missed trades, the setup overlook or ignored. And you want to use your journal to identify behavioral patterns, emotional triggers, and places you can grow, you can make changes on. So the best practice is to journal this. Journal immediately after trading while your emotions are fresh. You guys know why I say this. right? Because you're going to forget it and you're going to forget how you felt while your trade was in drawdown or was in profit. Now, review at the end of every week to identify recurring patterns. Translate this insight into actionable improvement for the coming week. It's something you want to do every week. And the best practice you want to adopt is review your trading plan before initiating a trade. So before you initiate your trade, I know after trading this model for a while, for after 3 months, 4 months, 6 months, you're going to get it, have it at the back of your head. But even at that, you want to recite it because sometimes you just before you take any trade, because sometimes you just start neglecting some checklists, and when you come back, you'll be like, "Wow, this is not the strategy I've been trading since." So you want to review your trading plan before initiating any trade, and you only execute trades that you have anticipated and observed forming in real time. What do I mean by this? Now, something that I've noticed is that whenever I saw my setup, anticipate my setup and see it forming, and still I'm anticipating it, that stuff actually works well. So what I'm saying is that, for example, this strategy I taught you guys, whenever I see, okay, I cannot go, I don't want to go back. So whenever I see my setup, actually I see the trend is bullish. So I now start waiting for the new day to open and sweep the previous day's low. Then once it did that, I now jump to my 15 minutes time frame and start waiting to see a structure shift. Now I see the structure shift and I go and start looking for divergence before final enter. So I anticipated all these things in real time. So in most cases, setup that I anticipated usually plays out well, and I'm always confident in it. I usually follow my rules strictly because I saw it, I anticipated it, I'm confident in it. I saw it many things shake, the many checklist about to meet. So it's like me seeing something that I've seen many times, right? So this is something you can actually incorporate and it will help you a lot. Finally, if you did not recognize and track the setup beforehand, do not engage. It's a simple rule. You want to follow these rules as always. And if you guys want to work with me privately, you can actually send me a DM on Telegram, right? And we are still on the challenge we started on August, right? So the challenge was to accumulate 100k in profit capital, right? So I'm trying to help my students build up capital in trading. So we started the challenge on August, and we were able to pass the first 5k accounts. We passed this update was on October 13th. We passed the first 5k. You can see the first 5k account has been passed. The second one is up 3%. We try to make withdrawals from the first one and use it to buy the next bigger profit, which is 25k, and that's how we scale. And this is actually the proof of it. You can see it here. As you can see, this is the first 5k that we passed, and this is second. It's actually an 8%. This is the proof, and this is the second one. It's actually up 3%. So this update was made on October 13th. Today is actually, I think today is November 18th, right? So we made a more recent update on 10th of November. So I said the mission continues. The second 5k account has been passed, and the next 25k phase one is currently up 2.7%. So I explained everything to you guys, right? And these are actually the proof of it. So this setup we took, this is the distance, this is everything that has been passed, right? And that is up 2.7%. So that is it. And so the recent update I gave you guys was I actually posted this update that the 25k phase one has been passed with just two good trades. You guys know I use a unique strategy that is not SMC and ICT. As you can see, this strategy is usually 10-hour setup, 10-hour, usually 10-hour. Alright, so if you're not there, you can join it. This is my free Telegram channel. You can go and check it out. And the setup, most of the setup are for free. I'm posting it for free. So as you can see, the account has been passed, right, with the proof, right here, my 25k account, and we are still going to keep scaling up. So if you guys want to join, you can actually send me a DM and join the challenge, and also you're going to learn my unique strategy. This is the one that I just posted, 4.5 hour. My setup are usually 10 hour. Like this when I posted it in real time for free. You can go and verify it. So if this is something like you are interested in, definitely reach out to me. And but if you don't have money to do it, just um follow this free Telegram channel and just take the setup and just look at these rules I pinned here. Look at these rules. Just not all setup are posted for free. So when you see one, capitalize on it. Get a reliable profit. Risk 1% per trade, nothing more, nothing less. And if you hit a trade, so just follow the rules to take the setup and try to do the challenge on by yourself. Right? You really want to challenge yourself. That's how you make money from trading. Alright guys, so that's it for this video. I hope you guys like it. As always, smash the like button and subscribe to the channel, comment, share, do all the YouTube stuff, and hopefully I'll see you guys in the next video.